Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Tuesday, the Australian dollar fell its heaviest daily loss in 8 days as the US dollar, which measures the greenback strength against a basket of 6 major currencies, slowly strengthened into the run-up to this week's US jobs report, which could cement the US Federal Reserve's recent hawkish stance if the number is stronger than anticipated. Looking at the US labour markets number, is that we are expecting for June non-farm payrolls change to rise to 675,000, while the May release inked in a 559,000 rise. The unemployment rate is expected to drop from previous at 5.8 to 5.6. Looking ahead, you can see that the technicals are still somewhat negative, even though the market is attempting to at least show some support at this front of that level of 74, 70.75. I do anticipate, given to the current structure of the pattern, we still could expect to see the challenge of 74.70 and maybe a slip to 74.20, 25 before profit taking is likely to emerge. Looking at the euro, well, the market, since the rejection of that 119.76 level here, is that we're still focused on that 118.60 support. I believe the market may extend lower and therefore look towards 117.50 before any turnaround or profit taking. As you can see, I've drawn a line here that does support this bearish or negative signal and therefore could see also keeping an eye on the ADX as it slightly strengthens here, keeps the bear phase intact. Keeping in this up channel, you can see for the last fourth consecutive or into the fifth consecutive day that the bears continue to weigh on dollar yen. Or should I say, the more to the point is that yen strength is continuing. And with the focus still holding to 109, 50, 80 area. It's a little bit hard due to the recent spikes that we've seen over the last couple of days. But nevertheless, with the technicals still breaking down and the MACD nearly giving a negative signal, could marry up and support this bearishness that should strengthen. Reassess from 109, 50, 80 area, just in case we see further slippage, that is towards 108, 45, 65. The pound was again weaker overnight and nearly claimed the recent challenge of 138 figure 10. It's not a support, I just view it as an entry point to assess where the market can likely go. And as you can see, we have respected it back in April, but nevertheless, I feel the market could slide through 138 figure 20 area and look down towards 137, 40, 45 before profit taking comes in. Just keep an eye on these technicals. Just there's a little bit of divergence there, but not enough to support the market turnaround. I like the way the ADX is coming back into play to support a negative signal, so therefore keeps the overall view. And let's see if the market can reach its objective. As I said, 137, 40, 45. Sterling yen was weaker overnight and getting closer to its objective, which is at 152, figure 10. Reassess from there. I'm a little bit skeptical in terms of the balls will come back into play, but nevertheless, it was a break back here in May that saw a very strong surge from 152 to 154 nearly. And also the fact is that we saw nearly a bullish outside range day from the previous challenge. That's why I feel the market may show a gain around the strength towards this level. So as you're trading, do remember to continue to keep your stop losses and take profit according to your risk management. Nevertheless, let's see if the market can eventually reach its downside target. If we look at the gold aspect, we can see that the market broke the level of 1,760, but didn't close. However, we're just on the cuff now around that 58.60 level after seeing a low of 57. I don't view it as a support now, but I do anticipate that the longer we remain underneath 1,773, the downside risk could see this trend strengthen. And also just keep an eye on this divergence a little bit, but nevertheless could see a slide down to 1,720 before profit taking comes into play. As you can see over the previous price action, The bears come swiftly and furious in terms of how the falls are, and therefore this one move could actually happen overnight or in the next couple of days before the non-farm payrolls. But still, the dollar index is strengthening as it trades around 92, and therefore could still see further sliding gold. Very interesting to see that oil challenged the level of 72.05 and rejected the level, but not quite out of it as of yet. Looking at it from a broader picture, I still feel the market can slip lower. However, if we close above 73.75, that would give some merit to the bulls, and therefore could see a new high posted around $75 a barrel. But with the divergence, outside range day, breaking down technicals, and negative MACD to a weak signal, should come into play, eventually see the market slide. Coming up though this Thursday, we've still got the OPEC meeting that will most probably bring in some volatility as well. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.